Alright guys, we're here today to talk about the reflation trade. Um, yeah, so a little bit on reflation. Everybody knows what that is, right? Probably not. Okay, if you're on this channel, you probably have skimmed and you think I know, but you know what? Like, I think people, have heard of inflation. People have heard of deflation and stagflation, which is inflation without growth. People have heard about, all kinds of flations, right? Well, we're at a point in our economy when, a point in time when there should be a phenomenon that's similar to inflation called reflation that is essentially the regrowth of our economy coming out of the pandemic. Okay, so what that means is that people are moving. People have invested in tech and growth stocks for years, right? The last decade, in fact, from 2009, 2010 onward, tech has been going up, and any of the growth stocks and those guaranteed large cap stocks that are are a surefire bet to go up have been going up, and pretty much throughout the pandemic, tech has gone crazy up, right? Because tech people relied on tech more. So basically, that's been going on and on and on. And recently, there's been a lot of hoopla about tech being overheated, right? You can check out the Nasdaq and just see. You can see what's been happening with tech, right? And Nasdaq now, remember, it represents tech, the tech stocks, right? So like you can see, like there's like a this was for today, but you can see uh, chart finance at Yahoo. It's always a good chart to look at. We could check over the last 6 months, and yeah, I mean it's been going up and going, and then there's like recently, generally speaking, it's been somewhat stagnant, right? Like it's been growing up but still flat, right? So essentially, but if you compare to years and years into the past, right, from February 24th, even during the COVID dip, right? Like there was a brief dip, but the Nasdaq has been going up, and then 5 years tells you that that's been happening. But now, essentially, people want to go to the Russell. This is something that you check out more, because the Russell indicates more so what's going to happen the uh, over the next few months, right? Because people are trying to grow the economy, and the Russell 2000 indicates the popular small cap stocks. So people are going to want to start to invest in things that have been depressed, right? Like since the AMC, GameStop phenomenon, everything like that, just indicates that. And this has been further boosted by the meme economy, so to speak. So now, uh, people are worried about, well, okay, now people want to get the economy going again. This traditional view of the Fed is that, well, the economy is going to go again, so we have to make sure it doesn't go too fast. So we have to control the growth by essentially increasing the interest rate, the Federal Reserve interest rates. And, like, I've heard that, at some points it's going to go to 2%. It's going to go perhaps higher, but 2% is, I think, the highest it's gone, and then the Fed has backed off. And Janet Yellen, currently the Fed chairman, or chairwoman, whatever, is that pretty much a hardcore Fed supporter, right? So that means she's going to want to probably stick to traditional Federal Reserve tactics to control inflation and reflation. She's also not too fond of cryptocurrency. She's not a big fan of cryptocurrency, so I'm not a fan of her. But anyway, let's take a look at Russell here. It's best to uh, Russell 2000. Screener. Russell. Okay, well, Rut. Ah, jeez. Okay, well, Rut. Is that going to be Ruth? No, I don't want to know anything about Ruth. I'll just stick to this screen for the Russell 2000. Okay, so basically, you can see that whenever there's a recession, right, there's a period when it goes down because the small caps are getting attacked, right? Businesses aren't surviving, and then it's going back up, and now it's going back. So basically, people are like, okay, let's reinvest in cyclicals, let's reinvest in things that are going to be, you know, definitely going to go up again. So now let's listen to some people from Bloomberg talk about the reflation trade. I'm going to react to what they're saying.
I had at the top of the show.
By the way, this is February 8th. This is a few days ago, and they were talking about the disappointing job reports, right? Which is, you know, what I mean, it's kind of expected, right? Because the economy has taken quite a hit.
There, whether or not Janet Yellen is correct or the Larry Summers is correct, and a few others that are worried about this amount of stimulus. If you had to choose, what side would you be on?
Well, you see, it's all to do with timing because theoretically, I would normally be on Summers' side. It's not about he's not against spending the money per se. He's just saying you've got to be careful how you spend it. But the problem is, it's to do with timing. And Yellen's looking at the labour data. She's very, very concerned. It always has been about underemployment, for instance. She's looking at that and saying, look, if you delay, you're going to make things worse. And in order for Summers' perhaps thinking to come through into policy, it needs a lot of thinking. It needs a lot of time, and that's the dilemma, really. It's again all about timing. So perhaps in this sort of scenario,
Yellen warns about long, slow recovery. So that means, well, what does that mean in terms of her thinking in terms of the interest rate? It could mean several things, right?
Maybe Yellen is right. Maybe if we wait and try and get the policy spot on in the way that Summers is suggesting, well, we could be too late, and we could see more scarring through the economy. So I think it's a very difficult balance.
Jane, if we take the view that inflation could come, some people are talking about a catch-up spike in the second quarter, then the Fed plays catch-up, but the market reprices rate hikes. Does that turn the dollar stronger in the second half of the year? Is there a risk the Fed reprices on the back of an inflation spike?
Well, this is really interesting, and of course this is what we've been seeing coming through the dollar really since the start of the year. I mean, certainly last week, ahead of that disappointing payrolls data, many people said, well, look, the dollar is the reflation trade right now. But of course, you've got to bear in mind that the
So what she's talking about is that the reflation could be, inflationary pressures generally can come from a few buckets, right? Like it can kind of come from the dollar, the money supply increasing due to things like stimulus, the Fed printing money, people's, the M2 money supply, people having more money in the economy, in their saving account, things like that. So that's the dollar-based inflationary and slash reflationary pressure. The other reflationary pressure, so people aren't necessarily sure where this reflationary pressure, I mean, some people are, but people aren't necessarily sure where the reflationary pressure comes from, right? All the time, because it could also come from global synchronized recession, global synchronized growth, right? So if the entire world is kind of growing, right, so that means that the economies of the world generally are becoming larger and stronger and more commodity driven, or service driven, but they're just having more activity. Then that means that the price activity will increase and prices will increase, and therefore the entire world, you can't really prevent that through different policies that are meant to constrain the dollar's activity contribution to inflationary activity. So basically, we have to see where that's happening. If people don't want this, I mean, typically people will blame the Fed for, and blame the U.S., the government, for printing a lot more money for stimulus as a contributor if it's dollar-based inflation. So.
Reasons that the dollar's performed better this year than last year is perhaps because the market started this year very short of the dollars, and the fundamentals, particularly with the Biden stimulus, have changed enough for people to really question that. Now, if we sound out what the Fed has been saying, Powell has been saying, and he will talk again later this week, or at least have an opportunity to talk, he's been very, very cautious, saying don't get ahead of yourselves. We've got a long way to go. And I think as we go through this quarter, whilst we're still optimistic about vaccines, etc., what we are going to see is quite a lot of disappointing economic data, because in Q1 we know that
basically quite a lot of disappointing data. Prepare to have your 401k blasted, essentially. I mean, that's kind of besides the point. Like, so besides the inflation, you know, besides, like, basically they're saying also, I think, that stagflation is on the horizon, right? Because there is inflationary pressure from rebounding of the economy and increase in vaccine, but then also like the consumer price and the price of consumer goods will go up, right? So essentially, you'll have the growth, you'll have inflation. You might not necessarily have, but you might not have necessarily have the growth because there's just a lot of fundamentals in the economy which are still weak due to people being unemployed. So you know, if the prices of things go up, but you know people are not able to afford these things, but they're still going up, then that's not a sign of healthy economic activity, and that's it's apparently what we might be looking at, and what I feel like we looked at during the pandemic. Like I've seen the price of like you know the consumer basket of goods go up pretty much across the board, you know, and that's just standard inflation. But you know, standard inflation happened while everything else deflated, right? So. Mm.
Still really in the midst of this crisis. So I think the market is in danger of perhaps getting ahead of itself, and the Fed is going to continue to push back on that, at least for.
So the Fed wants the Fed's cautious. Jerome Powell's cautious. Janet Yellen's cautious. So basically, Treasury Secretary Janet Yellen. I always mix I mix her roll up now, right? Like she's Fed Treasury Secretary, and then Jerome Powell's still the head of the Fed. So Treasury Secretary Jerome Powell's the head of the Fed. Chairman of the Fed. So basically, he's cautious because he thinks that people are going to go out and want to spend their disposable income, get the economy going. But then again, there's no meat behind it, right? It's like it could be a ghost, right? That's kind of trying to survive. A dying person trying to survive with their last bit of energy. So instead of letting them die through like vigorous activity and hastening their death, we should be careful. That's the Fed strategy, and this how they act would indicate how we trade and how monetary policies, how we react to monetary policy.
6 months, maybe longer. So from that point of view, I think this is going to be a little bit of a choppy ride for the reflation trade.
So basically, yeah, the choppy ride for the reflation trade. So a lot of people are banking on the reflation trade. People are, I think the crypto boom, which seems to have like tapered off today slightly, it's tapered off over the weekend, right? Bitcoin's back to 51K, which it's still going up. I mean, that's an interesting one, right? Because like, did that boom occur because of the reflation trade? Or was it strengthened because of the reflation trade? Does some people view Bitcoin as a store of wealth? Some people probably just take profits like a standard stock. Some people, think it's a speculative asset and they're investing like it's a bull market. Like really, like there's a lot of things that go into that. But I mean, if the component of the reflationary trade that people are talking about here and it being problematic, and really its fundamentals, lack of fundamentals, strong fundamentals causing problems for the economy in the future may be not indicative or not indicated by the price action, the overall moving average price action of Bitcoin, for instance. So just something to think about, like, when we're talking about investing in cyclicals and things like that and growth sectors, maybe it won't be as great as we think. That's the bottom line overall, right? So that means that don't put your money on index-weighted funds that index off of the Russell, or off of small caps that don't obviously buy on leverage. Small caps like they're base derivatives. Like I don't know, right? There's a lot of things that can be said, but yeah. Okay. Well, I think that's a lot for today. I'm gonna call it a day, but yeah, hopefully you enjoyed this video, and maybe you learned a little bit about the reflation trade. I don't know.